All right, everybody, welcome to our deep dive. Today we're going to be tackling Financial Freeway Part 1, Understanding Your Credit.
Oh, yeah.
It's a do-it-yourself kind of ebook guide,
Nice.
all about, really getting that solid credit foundation. And we're going to break down all the good stuff that's in there.
Love it.
So we're kind of assuming that everybody here gets the basics of credit, borrow now, pay later.
Right.
This ebook really jumps into like the nitty-gritty. It talks about, the 5 pillars that make up your credit score. Something I've always wondered, like how much each one really matters.
Yeah, it's not just about knowing them.
Right.
But it's really about how to improve them.
Yeah.
Yeah. And like, for example, payment history. That's a whole 35% of your score.
Wow.
So even a couple slip-ups with late or missed payments can really tank you. But the ebook does give some pretty clever tips to get back on track.
Oh, that's good because, life happens, right? So what about, I always get a little confused with the amounts owed. I know that's important, but what does that even mean? How do you make that, good?
Okay, so that's your credit utilization.
Yeah.
It's the ratio of your credit card balances to your limits.
Right.
So think of it like your gas tank.
Okay.
You don't want to be running on fumes.
Right.
Keep it below 9%. Ideally, even lower.
9%, got it.
And it actually even have tactics for how to lower it without hurting your score.
Oh, that's helpful.
Which is cool.
Yeah. Now, this is something I've heard, and I don't know if it's true.
Okay.
But I've heard that, closing old credit cards can hurt your score, even if they're paid off.
That's true.
Really?
Yep. So length of your credit history counts for 15%.
Oh, wow.
So those older accounts, they really help.
Okay.
They're like a badge of honor.
Oh, okay.
For good credit management.
Got it.
So even if you're not using them anymore.
So keep them open, even if you're not using them.
Exactly.
Got it. What about the mix of credit you have? Does that even matter?
It does. But maybe not as much as you think. So having different types of credit,
okay,
like revolving, installment, open, shows that you can handle various financial responsibilities.
Okay.
It's only 10% of your score.
Oh.
But it's still a good thing to keep in mind as you're building your profile.
Okay, all right. So last one. This is the one that always trips me up, new credit.
Yeah.
Because I'm always like, I don't want to apply for anything because I don't want it to hurt my score.
Right.
So
that's where understanding hard versus soft inquiries comes in.
Okay.
Hard inquiries happen when you apply for credit, which can temporarily ding your score.
Yeah.
But soft inquiries, those are like checking your own credit or pre-approved offers. They have no impact.
So those are okay.
Yeah.
I can do those all day long.
Okay.
And it won't hurt my score.
Exactly.
All right. The ebook actually gives some good advice on strategically applying for new credit so you're not always seeing yourself. Yeah. Okay, so we know about the 5 pillars. How do we actually get our credit report? I know we're all supposed to check it regularly.
Right.
Where do you even do that?
That's where this ebook gets really practical.
Yeah.
So it has links to access your free reports from all 3 major bureaus, Experian, TransUnion, Equifax.
Got it.
And also even some lesser-known secondary bureaus.
Wait, what?
Like check systems for banking history.
I didn't know that.
Or clarity services for consumer loans.
I've never heard of that.
Yeah.
So those are important to check, too.
Yeah, it's good to know what's on there.
Okay, but when you check those reports, what are you even looking for?
Right. It can be so overwhelming.
It is.
It is. So the ebook has this great tip.
Okay.
Make a negative list and a positive list of all your accounts.
Okay.
To kind of help you analyze those reports better.
Oh, that's helpful.
Catch any errors or even spot potential fraud.
Oh, that's smart.
Yeah.
Okay, I like that. All right, so now the ebook uses this term, trade lines.
Yes.
And I'm like, I've heard that, but I don't really know what it is.
Yeah, so trade lines are like the building blocks of your credit history.
Okay.
So your own credit accounts are your primary trade lines. But then there's this interesting concept of secondary trade lines.
Okay.
Where you become an authorized user on someone else's account.
So it's like you're piggybacking on their good credit.
Basically.
Is that legal?
It is.
Okay.
Yeah, and it can be a strategic move.
Okay.
To help boost your score.
Got it.
Especially if you're just starting out.
Makes sense.
But the ebook does caution about the risks involved.
Right, because
you're sharing the fate of that account, good or bad.
That makes sense.
Yeah. And they actually mention a website, tradelinesupply.com.
Oh, wow.
For people who are wanting to explore that more.
Okay, interesting. But now the ebook, it gets intense. It has this 13-step credit stacking strategy.
Yeah.
Can we break that down a little bit? What does that even mean?
So credit stacking is all about strategically building a really solid credit foundation.
Okay.
So you can get funding, whether for personal goals or even starting a business.
Got it.
It all starts with something as simple as establishing banking relationships
Okay.
with both credit unions and larger commercial banks.
Okay, so it's not just credit cards. It's like your whole banking relationship.
It's the whole picture.
Got it.
Yeah. And then from there, you've got secured lines of credit, secured credit cards, credit builder accounts like Kickoff and Kovo, all these aimed at kind of establishing a positive track record.
So you're diversifying, like your credit portfolio.
Exactly.
Makes sense.
And then it even recommends getting a regular charge card from Ava Finance.
Oh.
Which requires full payment each month.
Okay.
So you're not racking up revolving debt.
Okay.
And then strategically adding a couple store cards to the mix.
Okay, I thought store cards were like the devil.
It's all about using them strategically. They often have lower credit limits.
Oh, okay.
Easier to manage, early on.
Got it.
And it shows lenders that you can handle different kinds of accounts responsibly.
Oh, that's a good point.
Yeah.
Okay, but this 13 steps, it seems like a long game.
It is.
Yeah.
It is. But they make a pretty bold claim.
That's that.
By following the steps, you can obtain up to $250,000 or more in funding.
Wow.
So it's a big goal to work towards.
Yeah, that's a pretty good incentive.
Yeah.
All right, before we get too far ahead,
right,
let's break down the rest of that credit stacking strategy.
Love it.
In our next segment.
Okay, so we left off talking about that 13-step credit stacking strategy.
Right, yeah.
So like establishing those banking relationships and opening up those accounts strategically.
It's really fascinating how they kind of lay it out like you're building, a financial structure, like brick by brick.
Exactly. So after you've opened those initial accounts, the secured lines of credit, secured cards, credit builder accounts, you have to let them age.
Okay.
For at least 91 days.
91 days. Is that like a magic number?
Not magic, but it does, go along with the way financial institutions and credit scoring models operate.
Okay.
So they're looking for that consistent, responsible behavior over time.
Oh.
It's like proving yourself.
Got it.
Yeah, before moving to that next level.
So patience. Patience is key.
Patience is key.
Not about instant gratification.
Exactly.
Okay. So what happens after those 91 days?
Okay, so then they recommend adding 3 authorized user trade lines to your report.
Okay.
Ideally with high credit limits, low utilization, and at least 5 years old.
Wow. Okay, so now we're talking about those secondary trade lines.
We are.
So the timing is important. Yeah. You establish yourself first, and then you kind of add on that other good credit history.
Exactly.
Okay, so leverage it to boost your score.
Yeah, especially if you're new to credit.
Right.
Or maybe rebuilding after a setback.
Got it.
But remember, choose those authorized users wisely.
Right.
Because you're kind of hitching your wagon to their behavior.
Yeah, it makes sense.
Yeah.
But they don't really explain why, with the authorized user, why those 91 days matter.
It likely has to do with those credit scoring models and how they analyze the data.
Okay.
So by establishing your own history for those 91 days and then adding the authorized user, it shows that progression.
Got it. So we have those initial accounts aging, we add those trade lines. Yeah. What's next?
Okay, so get ready for this.
Okay.
Apply for credit cards through all 6 bank accounts you've opened.
Wait, all at once? Isn't that going to hurt your score?
It's an aggressive move.
Yeah.
But they seem to be betting on the fact that if you follow the steps carefully, your score should be strong enough to handle it without a big hit.
Okay, so you're kind of building up to that point, and then it's like...
You're increasing that credit capacity.
Got it.
And showing that you can manage it.
Okay. And then there's another 91 days.
Another 91 days. Wait, yeah.
Wow, so we're talking 182 days now.
Exactly.
Of being patient.
Yep.
Okay, I'm seeing the theme here. So what's the ultimate goal?
So they really emphasize leveraging that strong personal credit to obtain business funding through personal guarantees.
Okay.
So applying for business credit cards.
Okay.
Lines of credit.
Through those banks that you've now built relationships with.
Exactly.
So this whole thing is about getting to the point where you can get bigger amounts of funding for business ventures.
That's the idea.
Yeah.
And they suggest that with this, you could secure up to $250,000 or more.
Wow. Okay.
So it really highlights the link between personal credit and business funding.
That's huge. Okay, before we go on, I want to go back to the secondary trade lines.
Yeah.
Because I think that's where a lot of people might get tripped up.
Right.
And maybe the ebook doesn't talk enough about the risks involved.
Yeah, it's easy to get excited about the benefits.
Right.
But you are linking your fate to their financial behavior.
What if they start missing payments?
Yeah, that's the risk.
Or racking up debt.
Exactly.
And that hurts me.
It can directly impact you, even if you didn't do anything.
So it's not just about finding somebody with good credit. It's finding somebody you really trust.
Exactly.
That they're going to keep being responsible.
Yep, that due diligence is so important.
That's a good point, yeah. Do they mention anything about, like, how to find those people?
Yeah, they recommend researching any company that offers trade line services.
Okay.
Like the one mentioned earlier, tradelinesupply.com.
Right.
Look for reputable sources, proven track record.
Okay. So back to that $250,000.
Yeah.
Is that realistic for everybody?
You know, individual results may vary.
Sure.
It depends on your starting score.
Right.
Your history, how diligently you follow the steps.
So it's not like...
It's not a guarantee.
No magic formula, yeah. But it does show the potential.
That highlights the potential.
Yeah. It's about shifting your perspective. Like, credit can be scary.
Yeah.
But it can also be a tool.
Exactly.
Yeah. I'm feeling that shift, for sure.
Love it.
Okay. One more thing.
Yeah.
They keep mentioning personal guarantees.
Yes.
What does that even mean?
Okay, so a personal guarantee is a promise you make to repay a debt.
Okay.
If your business can't.
Okay.
It's often required for business funding.
Got it.
Especially for startups.
Right.
Or those with limited credit history.
Okay.
So you're putting your personal credit on the line.
To back up the business.
Exactly.
So that's why this personal credit is so important.
It is.
To get to the business funding part.
It all comes full circle.
I'm seeing how it all fits together.
Yeah.
It's really like a holistic approach.
It is.
Yeah. All right, well, we've covered a lot.
We have.
The 5 pillars, credit stacking, trade lines.
It's a lot.
What would you say, like top 3 takeaways from this?
Ooh, top 3. Okay, for me, building those banking relationships.
Okay.
Diversifying your credit mix. And strategic use of those trade lines.
Great points. For me, I think it's the patience.
Yes.
It's not about quick fixes. It's about slow and steady.
It's a journey.
It's a marathon, not a sprint. Yeah. All right, before we wrap this up, is there anything, any downsides, any challenges that maybe they don't really address in this ebook?
You know, while they paint a really positive picture, it's not without its risks.
Okay.
One challenge I see is the organization and discipline it takes.
To manage all this stuff.
To manage all of these accounts.
Yeah.
You know, it could get overwhelming.
It could.
If you're not on top of it.
It sounds like it. It's not set it and forget it.
No, you got to monitor it.
Yeah.
Budget carefully.
Pay everything on time.
Exactly.
This is not for the faint of heart.
No. You got to be willing to put in the work.
You got to know what you're doing.
And another risk is overspending. You know, when you have those increased credit limits.
Right, because you get excited.
Yeah, it's exciting.
You're building credit.
Exactly.
But you forget.
You still have to pay it back.
You got to pay it back.
Yeah.
So it's not just about building the credit.
Right.
It's about building the responsibility.
Absolutely.
At the same time.
Budgeting, tracking your spending.
Right.
Setting goals.
They give you the foundation.
The tools.
But you got to build on top of that.
You got to do the work.
Yeah, okay. I think we've covered the key points of credit stacking.
We did.
Benefits and pitfalls.
Absolutely.
All right. Now, for our final segment, let's kind of zoom out.
Love it.
Big picture.
Let's go.
Okay, so we've been like really in the weeds with this ebook.
Yeah, deep dive for today.
About credit scores and, trade lines, credit stacking, all that. But what does it all mean?
Right. Like, why do we even care?
Yeah, why does it matter? It's not just about, having a high score to brag about.
No, not at all. It's about that freedom, those opportunities.
Yeah.
You know, this ebook really highlights that. Like a strong foundation can help you buy a home.
Oh, yeah.
Get lower interest rates on loans.
Right.
Even start your own business.
Yeah, it's about taking control.
Taking control, exactly.
It's almost like credit is a language.
Oh, I like that.
And the ebook is like giving us the dictionary to actually speak it.
I love that.
So the more we know, the better we can communicate.
Exactly.
Our financial worthiness.
To those lenders, yeah.
Yeah. So what advice would you give to someone just starting out with credit?
Start small.
Okay.
Build slowly.
Okay.
Don't jump into credit stacking right away.
Right.
Get a secured card, a credit builder loan. Prove yourself.
Prove that you can manage it.
Exactly.
Okay. What about someone who's had maybe some bumps in the road with credit?
Don't give up.
Okay.
It takes time.
Okay.
It takes work.
Yeah.
But you can rebuild. Focus on those basics.
Right.
Paying on time, keeping that utilization low, and dispute any errors.
Right, because those can happen.
Oh, they happen all the time.
Yeah. So consistency is key.
Consistency is key. It's a marathon.
It is a marathon. This whole deep dive has been a journey.
It has.
But I'm not overwhelmed. I feel kind of energized.
That's what we want.
Yeah.
It's about taking that fear out of credit.
Right.
And giving you those tools.
Okay. So to wrap things up,
yeah.
Now that you know more about credit, how are you going to use this knowledge to build a brighter financial future?
Go get them, hit that financial freeway, and reach for those goals.
I love it. Thanks for joining us, everybody. This was a great deep dive.
Absolutely. Until next time.